Hallo, hier ist nochmal Michael Adams für Stock-Telegraph. Ich bin immer noch auf der PDEC und ich hatte ja versprochen, dass ich noch ein zweites Interview mache mit dem Bob Baldock, weil es einfach zu viele Fragen von Ihnen waren, die mir gestellt wurden, die ich bitte an Mining stellen soll und beantwortet bekomme für Sie. Und ja, deswegen freue ich mich, dass wir jetzt hier zum zweiten Mal sind und ich die Chance habe, jetzt über das andere Polymetallic Projekt zu sprechen, das Projekt mit Bob. Bob, thanks for taking the time again to talk to me. And this time our topic is the project. It's called Mangapur. It's a polymetallic project.
Yes.
And could you give us, just as an introduction, a quick overview on the project?
Certainly, Michael. We acquired the Mangapur project because it was a large project. We were looking for life. We talked about dividends and sustainability of dividends.
Right.
And so we need to have projects that we know are of size and have the potential to give us longer life.
Okay.
Rather than just a very short 3 to 5 year gold project which then disappears and you waste a lot of the shareholders' money by having to pull down the plan, do environmental reclamation and go away. Right. So that's the objective of such a project.
Okay.
And it is potentially able to do that, and we're working on doing that by proving up a resource. We've done a lot of drilling, we've done a lot of work, and we can go into that as
yeah, we will have a lot of, again, we have from my viewers and from my readers, I got a couple of really detailed questions, and I'm too stupid to remember them all, so I have them here on my iPad to just read them to you. So the first one would be, as the mining sector is in crisis mode, could Monument not take advantage of greater capacities available to accelerate its exploration activities at Mangapur and or Solanzing, which we talked about in the first video?
Yes.
Does the company have sufficient capacity in its laboratories to analyze samples? Would it be possible to analyze about 2,000 meters per month of drill results? And does Monument currently have a drill program running?
Yes, we do have a drill program running, and we do have the capacity not to put any specific numbers of meters, but for instance, our laboratory at Mangapur, our assay laboratory, has got a capacity of 2,000 samples per month.
Okay.
And roughly there's 1 sample per meter, so that gives you an understanding of capacity. And last month, for argument's sake, we put through 1,865 assay samples through that laboratory. So it's up running around that. Now, those aren't all exploration assays, because keep in mind that we have grade control for mining, and we have process control for the plant. That requires assays as well.
Right.
So you can't devote all of that capacity just to exploration.
Okay. So next question would be, if you could please explain what your plans for starting with the production at Mangapur are, and when that might be the case, what's the expectation? Could you explain the individual stages and the time frames that you need to reach the production stage?
Sure. That's maybe the market is a bit confused, Michael, because we've had to change directions.
Okay.
Because of the market forces. When we first bought Mangapur, iron was $140 US a ton.
Right.
It went up to about 190 plus per ton. Today it runs between 60 and 68, 70.
Also a huge decline.
A huge decline. Now, of course, that impacts production decisions and a lot of other decisions that flow from that. So we looked at the project and we decided we had to do something different. And we are flexible, so we looked at copper. Now, this is an homogeneous, what's called a homogeneous ore body.
Okay.
So in other words, you just don't have a block of copper and a block of iron ore.
Okay.
It's all mixed up.
That would be easy.
That would be easy, yeah. And this industry is not for the faint-hearted.
That's right.
If it was easy, everyone would be doing it.
Right.
The issue that we've got is that this ore body has got many metals in it, including gold and silver, copper, iron, and others. So the challenge for us is to get out an economical metal.
Okay.
And we're focused on copper because the long-term trend for copper shows pretty good stability. Over the longer term, it does have some volatility in short cycles, but it seems that you can predict it, certainly more than the iron ore predictions at the moment.
Okay.
Iron ore is not projected to last at those high levels or get back there anytime soon.
Okay.
And that's simply because of supply and demand. China was the biggest buyer in the world.
Right.
It stopped buying. And the people that do sell to it, the big four producers like BHP, Rio Tinto, and Vale in overseas, they produce at a cost of about $23 a tonne.
Okay.
We can't compete with that. Smaller producers can't compete with that. And they ship it in 500,000 tonne bulk carriers.
Right.
Again, we can't compete
do
with
that.
that.
Right. Sure.
So that's off the table for the moment. So we focused on copper, and that's why another reason that we acquired Intec, because Intec does produce copper.
Okay.
It produces LME grade copper. We can go into that a bit later.
Yep. Okay.
But the next step, your question was about the next step in getting into production. First of all, we do the confirmation drilling. We do step-out drilling, exploration drilling, to see what we've got as an ore body.
Okay.
And we've done that. We've drilled 110,000 metres into Megapur.
110,000?
110,000.
Wow.
That's a lot of drilling.
Right.
And that's a fairly significant investment. So we're reasonably sure of what we've got. We think that we can produce copper from that. And so now the way forward is to look at which way we want to produce copper. Mm-hmm. You can produce a copper concentrate and export it.
Yep.
That is plagued with issues. We are much better off if we can produce copper metal in country.
Okay.
Again, that's back to Intec and why we acquired Intec.
Right. Which we had the information already in the first video. So again, if you didn't see it, take a look at it right now. Okay, so the next question would be when the shareholders can expect the PEA on the Mangapur project, when you're going to release that, and are you planning to follow up with it with a preliminary feasibility study?
Yes, we are planning to do that, but one of the pieces that's missing at the moment is the mining license for Star Destiny.
Okay.
We've been waiting for the government to issue that mining license in Malaysia.
Yep.
Government, particularly the Malaysian government, is particularly slow in issuing mining licenses.
Okay.
They have a backlog of something like 7,000 mining license applications.
Wow.
They tell us.
Okay.
So the challenge for us is to get that out, because what the market needs to understand is that we can't publish a 43101 or a PEA until we own the land and have a license to mine for the land that the ore body is contained on.
Right, okay.
If it belongs to the guy next door, obviously you can't claim that you're going to produce from that.
Yeah, sure.
So that's the fundamental issue there. But we will get to it in due course. Yeah.
Okay, and but your local connections, like you have some very good connections there, so you can hopefully, I keep fingers crossed that you can speed that up.
We're working on that, yes.
Okay, perfect.
It's not straightforward, and everybody's got connections, of course, but we are local, we have been there for a long time, and we believe that we'll get done eventually.
Okay. Next question which was submitted to me is about the iron ore production at Mangapur that has been postponed. Was that because of the low iron ore price? And do you have a cost-efficient transport solution right now? What are your expected cash costs per ton, including the transportation costs?
Yeah, well, I mean, that answers I've already given in part. Yes, the deferral of production of iron at Megapur is simply related to price.
Yep.
If we could produce something at a profit and sell it, we'd do so. But we can't.
Right. Okay.
And we've already addressed that in the previous question. So the next thing is, what about the freight costs and so on?
Yep.
Well, that won't apply if we're not sending iron ore out, and it won't apply if we produce copper metal in country.
Right.
We will produce copper metal, mega pure, on the ground, and we will be able to sell that in Malaysia.
Okay.
Because Malaysia presently imports 200,000 tonnes plus of copper metal.
Okay.
For the local producers or manufacturers of copper tube, copper pipe, copper wire, and all the other sundry copper products.
Okay.
So we would be able to provide them with copper in country.
Yep.
That saves a capital outflow for the Malaysian government. They don't have to convert ringgit to dollars to buy the copper.
Yep.
They can simply come to our back door and put it in their truck and take it away.
Okay.
Now that entitles us, because that gives so much benefit to the country, it entitles us to be able to apply for a 10 to 20 year tax break.
Oh, okay.
Right? Because the Malaysian government recognises the benefit to the country.
Yeah, that's very much in favour of you.
Yes. Okay. So that's our part of our business strategy.
Okay, cool. So then, again, my viewers are so informed about the company. Yeah. So one of the questions I was given was is referring to an interview that is from September 2014, and where it seems you have outlined the potential of achieving $100 million of earnings within the next 2 years. Is this still valid? And what, and you already touched that, is happening to the tax exemption for Mangapura? In the past you've mentioned it's for 10 or 20 years, as you just confirmed.
I think that I've answered in part, but I'll say it again. The price declining of iron ore kills those sort of projections.
Yeah.
The price is less than half what it was, and obviously that makes a huge difference to that project. But given copper, and the comments that I've just made about copper, that has easily got the ability to produce for that sort of time period.
Wow. Okay. Yeah. Okay. And the next question would be, or is, what will happen to Mangapura if the current low metal prices prevail? Will you keep the project on care and maintenance, or start production and stockpile the output?
Well, that's a mixed question, really, because I spoke about the type of ore body, and it's homogeneous, so you can't mine ore without mining copper and iron.
Yep.
So the question for us is, can we economically mine both copper and iron ore, stockpile the iron ore and sell the copper?
Right.
And so we will need to do that study to make sure that we can, and put some variables in there that show us at what point we cut off, and we can't any longer stockpile iron without any sale, but incur all the costs and sell copper for a big enough margin to pay all those costs.
Right.
So that now, because of our change of direction and putting that plant, the iron plant, on care and maintenance, that's a question that we've still got to answer.
Yeah.
But obviously our investment is significant. The potential for long-term production is significant. So we will keep going, because these the peaks and troughs in this industry are cyclical. They've stayed with the industry for decades and decades. It's how it's always been, and it's how it always will be. Yeah. Because it's driven by world demand.
Yeah.
And
been there, done that already, yes. So.
Yeah, that's right.
And sorry if some of the questions are kind of interconnected. It's coming from different readers, and so they don't know about each other's questions, right? So I didn't want to just cut them out.
Yeah.
So the next question would be, including the acquisition and development, I think Monument has invested some $120 million into the Mangapura project so far, which is significant. Does the company have to write down some of its investments in that asset, as many of the majors have done already?
Yeah, we believe that we don't have to write down.
Okay.
At the end of the day, that'll be up to a judgment call by auditors, by our other management internal view, but our view at the moment is that we don't have to write down. It's a project in development, and until we run economics, we won't be able to say, well, it's not going to make any money, or it's going to make X money. And so that decision is still ahead of us. But at the moment, we see potential profitability, and we'll continue to develop on that basis.
Okay.
On that part, we've done a fair bit of the overhaul of the existing plant. we've actually spent that money. There's pictures of all of this, including the copper production, on our website just posted. So investors can go and have a look at that. They'll be able to see actual copper production. They'll be able to see what we've done with the plant. It looks like a brand new plant. It's not quite, but it's what we call a serviceable 1,000-ton a day pilot plant. And it will prove concept and show that all these economics that we're running are valid.
Yeah, so that was it for the questions. To kind of sum up, so on most of the projects you're waiting for a price recovery of the underlying commodity, but because you can't wait forever, so you're still trying to move forward the best way you can. You have some exploration going onwards, you have a lot of cash in the bank, there's no planned dilution of the shareholders, so I would urge you to take a more detailed look into the company. The website has all the information, and I think that the companies also, if you have some more questions, you could directly address them to the company, right? And they will be happy to answer that. So Bob, thank you very much for taking your time to get back to me and answer all these questions. And again, I'm really happy to have that kind of a subscriber crowd coming up with all these detailed questions. So thank you too.
Thank you very much.